Greetings, Dwayne, CFRN. Quick recap of the Concierge trade alerts that were issued last night, 3rd day of November, 2015. Today is the 4th day of November, 2015. Time now is 5:44 p.m. Eastern. Let me give you a look at the alerts from last night. And when I'm done here, I will get tomorrow's alerts in the win. Okay. All right, on the S&P 500 Emini Futures, our first move up above 2105 took us 3 3/4 points. How do you get out with 3 3/4 points? No, you probably don't. You might get out with 3.5 if you're trailing closely, or 3 1/4, or 3. If you have some psychic premonition that price is going to run up 3 3/4 points, you might put a hard target at 3.5. Follow what I'm saying? So again, you have to be saying, wait a minute, this guy says the same stuff every day. Right, because it's the same trades, the same trade setups, the same methodology. It's the same everything day in and day out. Now, each day plays out a little bit differently. We have fast days, slow days, wide range, narrow range, you name it. The market has more days than Sandy Koufax has pitches. God, I hope he was a pitcher. I'm not a sports guy, but I can do this. Okay, so 3 3/4 points. Important prices, important areas are almost always tested. On the second move up, we go 3 2/4 points. On the third move up, we go 4 3/4 points. And as we break down and trigger on the short side, we go 2.5 points. And then ultimately on this move, we go 5.5 points. We get down to 20.90.50. Alert was 20.96, 20.90.50. So the S&P could ask for much more than that. A lot of opportunities spread out over the course of the day. Okay, let us move on to the bonds. Now, yesterday was a huge day in bonds, short 155.10, and that baby dropped 27 ticks. At 32 ticks, it's $1,000 per contract per day. We only dropped 27. I say only. That's a nice trade. Okay, today bonds were a little more difficult. We had an alert to be long above 154.31 and an alert to be short below 154.22. So this first break to the upside, okay, it goes up all of 2 ticks. And then it backtracks from the trigger at 31, backtracks to 23, 7 ticks. We don't risk more than 4 ticks. So that's what's called a stop out. Okay? Then we have yet more turbulence in the bonds. Finally, we make a decent break to the upside. On this move, we tag 155.05. And then on this move, we tag 155.09. Okay? On the downside, on this move, we got as low as, well, this is going to be a continuation. So we're going to have to 154.10. So that's 12 ticks. Every day is not going to be yesterday. Okay. over the past, gosh, 3 to 6 months, we've had a tremendous number of $1,000 per contract days in the bonds. Once we have, now this is just basic technical analysis 101. Quite often, after you have a wide range day, actually this is 2 days, you're going to get a day, even 2, of consolidation. If you have a wide range week, you're going to see 2 to 3, maybe even 5 days of consolidation. Often, after seeing a wide range move like this, one might be better served to go look at a market that's done this for a few days and then look to take, because see, let me explain what's happening here. Price is consolidating, or as some call it, coiling. Like a spring coiling up, getting ready to release energy. And that's what will happen. We'll get a huge release of energy, something just like this. In fact, you could do a measured move and try to figure out exactly how far it's going to move, be it to the upside or the downside. All right, that covers bonds. Let's move on down the road. Crude oil. The alert for crude last night said to consider being short below 47.55. Alert 47.55. Okay. Now the alerts went out in the 1900 hour last night. 1915 to be exact. So we can plot this on the 19 or the 20, it won't matter. Now also we had a long trigger, crude GCL Z5, long above 48.05. Okay, so let's put a line at 48.05. Okay. All right. So the first triggers the downside, and then we trigger to the upside. We don't get on the downside. We actually get down to 44. So from 55 to 44, that's 11 ticks. Crude oil, you need 10 ticks to be done for the day. Now, if you get stopped out with 4 ticks or 5 ticks because you're trailing your stop, okay, don't scoff at that. If you are in a 10-tick market like crude, where it takes 10 ticks to be done for the day, if you get stopped out with 4 ticks profit, that's 40% of your daily production. Okay, do that 2 more times, and you've got 120% of your daily goal. That's substantial. All right, so there's 11 here. Up here, the high is 48.10. So we went up 5 from 48.05. Actually, I put it on 6 because you want to be 1 tick above. So you had 4 ticks, which tells you to go to break even. Ultimately, we go to 22 and we go to 28. And so 22 minus 6 would be 16. And 28 minus 6 would be 22. But see, this is all one fluid movement. So you're gonna, this goes from here back to here, then it jumps over here, then it runs up again. So I'm sorry, I said it was one fluid motion. This is 2 separate moves, okay? Then we trigger on the downside, 47.55. The swing low here is 33, so that would be 22 ticks. And then from 47.55, we drop all the way down to 46.17. So 47.55. 47.55 minus 46.16. That's 139 ticks. Well, here's a better way of even showing it to you. 47.55 to 46.55. That's $1, right? 46.55. All right. From 47.55 to 46.55, that's $1. That's 100 ticks. Okay? 100 ticks times $10 per tick is $1,000 per contract. So if you're trading one contract and you stuck it out all the way down, okay, no easy task, $1,000. If you're trading 5 contracts, you can do the math. If you're trading 10 contracts, you can do the math. Is that possible to trade that many contracts? Well, this candle here, the volume, 76,000 contracts in that hour. In this hour, volume 62,000 contracts. So you got 70. In these 2 hours, there's 130,000 contracts traded. So could you slip in there with 10 or 20 and not make too much of a fuss? The answer is yes. Okay. In the beginning, don't concern yourself with these big moves, knocking it out of the park. What you need more than anything in the beginning is to just simply get comfortable being consistently profitable. Because many of us in the early goings, we become very uncomfortable being consistently unprofitable. We literally have to rewire our brain, our way of thinking, our way of seeing the markets, our way of approaching it. We have to learn to think in probabilities. We have to exercise extreme discipline. Well, I don't understand why I can't just click the mouse and make money. Well, obviously, if you could do that, everybody would, and soon there'd be no markets, right? So, that's the story on crude oil today. The euro, big down day in the euro. We said to be short below 109.60. The first move down was for 16 ticks. You need 8 ticks to make the daily goal, which is $100 per contract per day. The swing low of the day was 849. So 960 minus 849. 960 minus 849 equals, looks like 111 ticks times 1250 equals, it's $1,387.50. Now that's the potential. In other words, that's what the market made available. Doesn't mean that's what you made. It means if you had some psychic ability that allowed you to stay in through this pullback and then get out right at that tick, well, then that's what was available. So let's talk realistically about, well, okay, that was available. When price came back and reset and triggered again, what did it do on this drop? Well, this drop, it dropped down to 22. So 60 minus 22. 60 minus 22 equals 38 times 1250 equals $475 per contract. So right there, that little swing low, the market made $475 per contract available. Doesn't mean that's what you took out of it. Okay? It's so important that you understand the difference. Don't come back at the end of the day and go, oh man, I just took 8 ticks out of this. I could have had this. Okay? You'll make yourself crazy if you do that. Don't. Yet, be aware, because, you know, that day may come for you. Or it may not. Because you're in a market like the euro that has substantial volume. You see, in this, even in this move here, this first move, there's 2,000 contracts. 2,000 contracts. So 4,000 contracts there. Could you come in with your 10, your 20? Yeah. And if you make $12.50 per tick, and you get your 8 ticks, and you do that with 20 contracts, you do the math. It's pretty substantial. Okay? All right. Next, we'll go to, what are we going to go to? Let's go to the Dow. First move on the Dow was good for 40 points. There's no ticks, just points. 39 points, 56 points, and on the downside, 9 points and 34 points. Okay. On the Russell, first move up was good for 21 ticks. Consider being long above 1189. Got up to 1191.1. Okay. The next break and move up took us to 1190.3. So that's 14 ticks. Then we trigger again. This time we run up. Then on the first move down, the Russell came right down to the trigger, which was 1182 on the short side. Didn't trigger. Triggered on the next move down, and it dropped to 81.2. And so it's 7 ticks. It's 8 ticks, but you want to remember you're going to get short 1 tick below the alert price. So it's 7. Now you need 10 to be done for the day. $10 per tick. So you were done here, you were done here. But here, you know, you would have gotten stopped out, worst case, at break even. Hopefully break even plus 1 or break even plus some. Okay, however much you're comfortable locking in. When you're going for 10, okay, and you're at 7, my suggestion is give 4 locked in. That's 40% of your daily goal. If it comes back and takes you out, that's okay. You got 10 trades a day to reach your daily goal. Last but not least, gold. Big days in gold. Check this out. Yesterday, did $1,000 per contract. That's what the market made available off of our alert. And it almost did 2, but not quite. And then today, we triggered on the long side. Good for 13 ticks. You only need 10 ticks to be done for the day. On the short side, this right here got down to 1114.70. So that's 8 ticks. Okay, remember at 4 ticks your stop goes to break even. If you're trading the 2420 blueprint, stop goes to break even. With 8 ticks in the trade and you're only looking for 10, at 8, I would have 5 locked in. Because if you get stopped out, that's 50% of your daily goal. All you got to do is go grab one more of those, and you're done for the day. We trigger here. We drop all the way down from 11:15.50 to 11:05.50. That is $1,000. 11:05.60. Is that the swing low? 560. So I got that wrong. Did I? Oh. That says 11:05.50, but this says the low. All right. So I guess truth is one tick shy of $1,000 per contract. Okay, one tick shy. All right, so that covers gold and bonds and the Russell and the Dow and the Euro and the S&P and soybeans. Okay, soybeans we said to be long above 882, short below 878. Soybeans is about the only market this happens in where we'll have the same triggers 2 days back to back. Okay, so no trigger on the short side, but on the long side, from 882 we need to go to 884. That gives you 2 points for the day. 2 pennies in soybeans from 882 to 884. Okay, 882 to 884. That's the same as 2 points in the S&P. $12.50 per tick. There's 4 ticks to a point in the S&P. There's 4 ticks to a penny in the soybeans. Each tick pays $12.50. So $12.50 times 4 is $50 times 2 pennies or 2 points, and that gives you your $100 per contract per day. All right. Okay, that's going to wrap it up for this recap edition, and I will see you tomorrow morning in the live trading room. And also, for those of you who are not partners, now these are still last week's weekly trading zones. It's been quite amazing how strong the carryover effect has been the last few weeks. This was the Sunday night Globex Open. We opened in a weekly trading zone, traded down to the zone, up to the zone, consolidated for 4 hours, moved to the next zone, consolidated for 2 hours, ran right up to the tick. This was the highest weekly trading zone from last week. And then today we made a run, and we finally, actually we came 1 tick shy of tagging it, 2109.75, and we did it about face, triggered on the short side. Okay, so there you have it. Tomorrow during the radio show, I will put this week's weekly trading zones up for the entire audience. I have to keep those private the first part of the week for the partners, because that's part of what being a partner at CFRN is really all about. I encourage you to become a partner, because as a partner, we can actually help you learn how to trade. If you want to set yourself free forever from the gurus, from the magical indicators and oscillators, from the things that go bump in the night, from the prophets, the crystal balls, the soothsayers, people that tell you they got some kind of way where you'll never get stomped out again, if you're just fed up, then come to a place of I'm never, ever going to be dependent on that again. I am going to set myself free So do yourself a favor, take the trial. It's free. CFRN.net/apply. Okay? All right. That's it. I'll see you tomorrow in the live trading room. If you have questions, call us 949-42-EMINI, 949-42-EMINI, or just send an email to support@cfrn.net. Okay? Thanks. Take care.